Okay. Oh, good. Good afternoon, everyone. We're just admitting people into the meeting. So bear with us, we'll give people a chance to join us before we dive in. There's our IT manager who is assuring me that everything looks good. Thank you so much, Jeff. Appreciate that. Well, let's get started. I know we'll welcome people as they join us. Good afternoon, everyone. Again, my name is Nanette Bichet. I'm an assurance partner here at our firm of Adams & Miles. I am joined here today by two people I feel privileged to call my partners, Leanne Monget, who's also an assurance partner. She heads up everything quality control in our firm. She also co-chairs our standards committee and has been living with, breathing these standards for many, many months now. Also joined by the head of our condo team. We are so proud to be the largest, to serve the largest number of condos in Ontario, a practice we're very, very proud of. And we're joined by Christina Ajith-Brandford, the head of that group. We know that many of you today joining us work in that sector, and we asked her, and she kindly agreed to be on hand to answer any questions that you might have about how these standard changes apply to you. She's also kindly agreed to monitor and moderate our Q&A for us at the end. We'll keep that until the very end. And we'll ask you please to use the Q&A function in the webinar, which I think you'll find at the top of your screen. There is also a chat function, which you see is active today, but we ask that you don't post the questions in there. We might not see them, but if you use the Q&A function, Christina will be sure to pick them up for us there.
Nanette, just to interrupt for a second, someone
Sure.
just chatted in that it sounds like you're very low. Is there anything you could do with your volume?
Can move closer. Does that help at all? Does everybody else hear me okay? Leanne, Christina, do you hear me okay? All right, so I encourage, if you're having some trouble, maybe turn up your own sound on your speakers. That might help as well. So we do have a lot of material to cover. We do want to dive right in. We may bump up. There is a risk we'll bump up right against the hour. Feel free to drop off if you need to, but we're going to hang back and try and answer as many questions as we possibly can to help you through this change. But before we get too far, I just want to take a moment. I encourage you to do so from wherever you're joining us today. We'd like to acknowledge that the Adams & Miles physical offices reside on land that are the traditional territory of Indigenous peoples for thousands of years. We are situated specifically on land traditionally inhabited by the Anishinaabeg, Huron-Wendat, Haudenosaunee, and Mississaugas of the Credit First Nation, as well as many others, covered by Treaty 13 and the Williams Treaties signed in 1923. We are grateful to live, work, and play on these lands, and recognize the learning, unlearning, and work that must be done to move forward with reconciliation. So welcome once again, everyone. I'm going to just take a moment and share my screen. Should also apologize if we have any tech hiccups. We're really going to try not to. Hopefully you see the first slide here. Leanne, can you see that on your screen? Perfect.
Looks good.
Wonderful. Thank you so much. So an auditing standard has changed. What does that mean for you? Today, we want to give you an overview of the changes to what we lovingly have referred to as CAS 315 for many months. Now, this is just an overview, and it really is tailored to what we think you as management, you being in the finance role of your company or your organization, Maybe you sit on the board of directors or a finance or audit committee. So those of you charged with governance, we want to give you an understanding of what this change means to your upcoming audit. We do have some auditors in the room with us, practitioners. This is not going to be the in-depth that you're maybe thinking it might be. And I'm sure you've already done all the very long courses to try to understand this change and to implement it in your systems. But again, we just wanted to take a little bit of time to run through what this means to you. But most importantly, give you some tips on how to proactively manage change. Change can be hard, it can be time consuming. So how do we think you might want to manage this change to cause the least amount of pain? And then most importantly, how do you just leverage this moment of change to really elevate your organization, use it as an excuse? And then we'll open it up for questions and answers. And so Leanne, turning it over to you to kick us off with the overview of the CAS 315 revisions.
All right. Okay. So as Nanette mentioned, CAS 315 is a Canadian audit standard, and it is a standard that deals specifically with how auditors identify and assess the risk of material misstatements within your financial statements, within your financial information. This actual process is not new. It's something that auditors have done for generations when they were conducting an audit. However, there was a significant revision and it became effective for December 15th, 2021 year ends. So beginning on December 15th, 2021 year ends. What that practically means is that it will be first applied for December 31st, 2022 year ends that just passed. So if you're having your audit done in February or March, and your year end is December 31st, 2022, you'll feel these changes. For March 30th, 2023 year ends, June 30th, 2023 years ends, and so forth. From now on, any audits coming up will be conducted with CAS 315 or the revised CAS 315. It's also applicable to all audits, no matter how large your company is, how small your organization is. Even if you only have 25 transactions going through your organization, CAS 315 is applicable for any audits being conducted after the periods we noted above. Um, However, obviously, everything will be tailored to your organization. So you may be sitting there and asking yourself, well, what was wrong with the old standard, or why was the CAS 315 revised? And really, there was nothing wrong with the old standard. However, it was in place since 2010. A law has changed in the last 12 years. We know the economy has been increasing in complexity over the past 12 years. We certainly know there has been technology changes, IT changes within your entities, but within the general world itself, and that your environments have changed in the past dozen or so years. And so the new audit standard recognizes these three items. It's also the hope that the new audit standards will promote consistency, how auditors are identifying and assessing the risks within your entities and within the financial statements. They introduced a new concept called scalable. It knows the new standard recognizes that not every entity is the same, that we have complex entities, we have more simple entities, we have large entities, and we have small entities. In the old standard, there was no concept of scalability. However, with the new standard, we recognize there are differences between organizations, and we can tailor our audit risk identification and assessment process to your organization. It is tailored. The new standard also increases the need for auditors to use professional skepticism. This is not a new concept. You probably have heard about it in the past, but it is providing auditors with some more guidance, and it's promoting the use of professional skepticism throughout the audit. In a few slides, we'll look at what really that will translate to you and your audit in 2023. And finally, it recognizes that the auditor will actually use IT in conducting the audit. How will the auditor use IT will depend on the audit that's planned, but this didn't really exist as much back in 2010 when the old standards were written. In the new standards, it recognizes that this is an audit tool that the auditor will use typically throughout the audit.
So just to let you know, Leanne, you cut up for me a little bit, but I don't know if you cut up for everybody else. but just we'll press on. Hopefully, and we caught the last point, and hopefully no more hiccups from here. Just to be really clear, the audit risk model hasn't changed. So something has fundamentally changed, but the audit risk model itself has not fundamentally changed. So the way we go about audits, them being a risk-based audit, a risk-based approach, that has not changed. And so I think it makes sense to just step back for a moment and just review what an auditor is trying to do at the end of the day. One, we're trying to obtain reasonable assurance. So think of that as audit evidence about whether the financial statements are free from material misstatement. Then we sit back with that body of evidence and we draw conclusions, and we express an opinion on whether the financial statements are being reported in accordance with your accounting framework. And again, this applies to every entity reporting under all the frameworks, right? Whether you're a pension, public sector, private enterprise, or a not-for-profit organization. And then finally, we report and communicate our audit findings. Now, this is the part of the audit as organizations, as clients. That's the part you'll see. You'll see us asking questions. You'll see us asking for documentation to get that audit evidence. You'll see us express an audit opinion, and you'll see our final report. But the bit about it that you don't necessarily see is where we have to first identify risks and assess those risks. And that's the meat and potatoes of this section, this auditing standard CAS 315. So if that hasn't fundamentally changed, Leanne, what has changed in CAS 315?
Can you hear me better now? I've taken off my headset, just sort of maybe thinking that might be the on and off. Is it good?
Seems good so far.
Okay. What has changed is that there will be a more robust, detailed risk identification and assessment process. So the auditors are required to go through the balances, the transactions that are material within your financial statements, and try to focus on the areas where there may be a risk that a material error may occur. And why we're trying to place so much emphasis and time at the upfront, the planning stage of the audit, is that really what should result out of that is a more focused audit response. So that field work that you're used to, those audit procedures that are used to, these procedures should be really customized and tailored to your entity's environment, to where the risk of a material misstatement could lie within your financial statements, in the balances, in the transactions, in the presentation and disclosure. So we do a lot more upfront work to get a better response. That is really with the hope of what CAS 315 is hoping for. And so because of that, we're going to focus on obtaining a really good understanding of your entity's business, of your organization. What is your business model? What do you do? How do you do it? How do you operate? What is your environment? And really try to assess what are the risks to your financial statements. And this is where you really come in, because this year, especially in your year one of applying CAS 315, we're going to be asking a variety of new questions. We're going to ask a variety to make sure we're updating the documentation that we may have had previously, but we're going to be asking you a lot more questions and new questions. So to obtain that understanding, we're going to look at your entity and its environment. We'll go into each one of these in a little more detail in the next few slides. We're going to look at your applicable financial reporting framework. We don't expect any changes in regards to that. And we're going to look at your system of internal control. And this is probably the area where you're going to see more questions. You're going to notice that this is where we're going to focus our attention on a little bit more in the 2023 audit than we have in past audits. And so what do we really mean when we say entity and its environment? We say it a lot, but what kind of information are we really trying to obtain to understand your organization? Well, we want to know how you govern. Who makes the decisions at your business or your organization? Is it done by management? Is it a tiered approach? Is there a committee? How much separation is between management and the board or a committee? We want to understand your organizational structure. What is the legal structure? Do you have divisions, departments, multiple locations? Where are the transactions and finances transacted out versus where is your business operated? We want to understand related parties. What are the balances, transactions, new related parties? Now, some of this you may think, oh, we've talked about that in past audits. And you are very right. We have talked about it in past audits. But this year, we're going to make sure that understanding is clear, concise, and that we have the complete picture. Then we're going to look at your operating models. What are your strategies? What are your objectives? Are you doing a risk identification process yourself, even if it's informal or casual in nature? What are the other factors that affect your industry or your business? Is there any regulatory bodies that you have to be concerned about? Is there a bank that's overseeing your financial statements? Are there covenants to consider? And finally, we're going to ask you how you assess your financial performance. How do you do that internally? Is there any external parties that are assessing your financial performance? And as mentioned a couple of moments ago, we do have various pieces of this information. This is not new, but we want to make sure we have a complete full picture, a good understanding to be able to do that risk assessment process that will lead to a better audit response, a more, hopefully, efficient audit field work.
So part of the obtaining and understanding, so think of it maybe as three large categories: entity and its environment that Leanne just went through, the applicable financial reporting framework that, again, we don't expect to change, and we bring that knowledge as well as you do to the table there. So then the third broad category is the system of internal control, which, as Leanne mentioned, is probably where we're going to spend more time than we had in the past. And the idea of internal controls can sound just like a big thing. How do you wrap your mind around it, your arms around it? How do you know if you have enough, if you've covered them off in all the right areas? And so the standards are actually really useful in that they are useful in so many different ways, but in this way in particular, they actually broke it down for us into 5 components of a system of internal control. And so these are the 5 areas that we want to review with you today, just so sort of review for your own knowledge of what do we mean when we say system of internal control, but as well give you kind of flavor of the information that we're looking for to build that knowledge of understanding. And so 5 components. The first 3 are what the standards tell us are more like indirect controls. So they are indirectly impacting how the numbers end up in your financial statements. The last 2 are what we call direct controls. They have a more direct impact on how the numbers end up on your financial statements. And so we'll briefly go over most of these. One in particular, we'll go a little bit deeper, and that would be IT, which we referenced would be a bit of a change as well. So what do we mean when we mean control environment? We are going to be asking questions. And again, we always have asked questions around these areas, but we want to know what management's oversight is like. What's the entity's culture? The more formal, the more best practice, that gives us a flavor of the organization or the entity. The more lax, the less formal, that also gives us a flavor of the entity. Has management made a commitment of its integrity, of how it wants to function and its ethical values? Is there independence between the board and management? Is the board overseeing internal controls? Do they even have an understanding of the internal control system? Authority and responsibility, is it formally thought of and assigned amongst people? Are there competent people on staff, and what do you do to make sure that you can retain them? And finally, again, these are all things that we're looking for indicators for. Are you holding individuals responsible for internal controls? The second component of a system of internal control comes to you in the sense of we're looking for your risk assessment process. Do you have a formal risk assessment process in place? Now, we know every entity out there manages all kinds of risks every day, but does your company or your organization have a process where you stand back and holistically look at risk? Not just financial risk, but succession risk, cybersecurity risk, reputational risk in a more holistic way. Do you identify the risks? Are you assessing the significance of the risks to you and the likelihood of occurrence? Are you addressing those risks? Are they ending up on a heat risk map? And are you pulling that out, say, on a quarterly basis to review if something's changed and if it needs your attention? So this is probably one area where when we ask organizations, do you have something like this in place? That's probably the area they say, well, not really that formal. And so maybe, again, we'll talk more about this later, leveraging this moment of change, maybe this is an area that you are going to choose to work on going forward. The third component of a system of internal control is around us gaining an understanding of how you monitor your internal control system. How do you know that the controls you've put in place are actually working? How do you know if they went wrong and there was a deficiency, and how was that remedied? What sources of information do you have to see that your internal controls are working? And I would venture to say that a lot of IT systems now can produce reports to show you deficiencies. Do you know that they exist? Are you monitoring them? Are you running them on a regular basis? Are you large enough to have an internal audit function? If you do have one, maybe it's time to think about it. Maybe you're large enough, complex enough that it would actually be very useful. But if you do have one, we would want to know what are their responsibilities, what were their activities, what were their findings throughout the year. Now, I promised we'd go a little deeper on IT, so I'm going to give it back to Leanne because that's our fourth component of the system of internal control.
And as we mentioned earlier, this is probably where you're going to see the most differences in the number of questions we're asking, in the nature of questions we're asking, and probably even the follow-up questions that we're asking, because we want to make sure we have a thorough understanding of your information system and your communication system. And when we say information system, what we really mean is the general IT controls, the IT application controls, and finally, the controls over the financial reporting, the financial statements, for example. But I think this is a good place to just pause for a second because, like, I'm throwing out buzzwords and throwing out like 3 different types of control within the information system. Remember, the concept that I mentioned a few minutes ago, one of the changes and one of the really good changes of this standard is that they introduce the concept of scalability. And it really means that really our audit process, the type of questions we're asking, the type of information that we're expecting from you will really depend and change on the complexity of your entity's IT system, basically on the complexity of your entity. Obviously, if you're a smaller organization, the type of IT controls that we're going to expect and we're going to ask about is going to be a little bit different than if you're Adidas, for example. And so that is a very good concept that was introduced with CAS 315. So as we go through the next few slides, don't get overwhelmed by the buzzwords and sit there thinking, oh my, am I going to get a generic type of list with 100 or 200 type questions on it? No, we're going to definitely try to tailor things, customize things, depending on your entity, your environment, your business operations. So what do we mean by general IT controls? Really, we want to understand what's your IT strategy. Who does the IT, make the IT decisions within your organization, your entity, your business? Who is responsible for the overall picture? Then we're going to drill down to the details a little bit. Think about the access controls here, both physical and password access. How often are they required to be updated? Are they required to be updated? These are the types of questions we're going to be looking for and asking. We're going to look at the types of softwares that you use, not just the financial reporting or the accounting software. We're going to actually look at databases, CRM programs, because a lot of those feed into information, either manually or automated into your financial system. So we're going to have a thorough understanding of these other systems as well. We may have some documentation from our past files, past years in our files, and of course, we're going to be relying on that. But this is an area we may not have as robust of an understanding in prior years, so we're definitely going to be wanting to update things, and we're going to be definitely asking some new questions. We're going to want to understand, are you using an off-the-shelf package system or is something customized? Because obviously there's different risks if it's customized versus if it's something that's used and produced off the shelf. We'll look at what policies you've put in place to approve software applications and purchases. We're going to look into data protection. Do you have a disaster recovery plan? Does it include backup? Is it formal or informal? And we all know that we are all getting those texts and emails from people trying to get our data, our information, our banking information. We see them every day. I have about 20 packages at Canada Post right now to pick up. And so we know this is a new type of risk that even 10 years ago we didn't have to deal with, but it is very common at the moment. So we want to understand, what is your business or your organization's controls in dealing with these type of ransomware, malware, viruses, and potential attacks. And finally, we want to look at your regular maintenance. What regular IT do you conduct? What software updates do you do? What is your regular risk management assessments around the general IT environment at your organization? Then we're going to look at your specific applications. What are the softwares you use? What are the applications you use? And the controls within each of those applications. And you'll see a list in front of me. These are the 6 or 7 common areas we're going to look at. Completeness. We want to understand that a transaction is complete from initiation to end. So initiation to completion. What are the controls in place to verify that, to ensure that exists? How do we know it's valid data? Is there unique identifiers within the application that you're using? And how is this indicated? What are the input controls around data integrity? How does a transaction get initiated within a particular application? These are all the items that we're going to try to understand. And we'll be making sure we have documentation within our file to be able to document that understanding and then use it for the risk identification process. That's the main goal of this. We're not just collecting this data because someone tells us we have to collect it, but really we want to take this information that we're gathering to really gain a good understanding, good knowledge of your entity to be able to do a robust, good detailed audit identification process of where the risk may lie within your financial statements to do a better audit job, to make sure the field work and the audit procedures are tailored to your organization. So there is a real purpose of gathering this information.
And the final element of the information system and communication, we're still in the 4th component of a system of internal control, is around your financial reporting controls. And think about that a little bit more about, the accounting software that you use. How are the financial statements generated? From what system? What happens to them? Journal entries, are they automated? Which kinds of journal entries are automated, or are they manual? Which kinds of them journal entries are manual? How the information flows through the accounting software. So how transactions are initiated all the way to how they end up in the financial statements. And then there are events that are not captured from your day-to-day transactions, like there's a going concern issue, for example. That's a different ballgame. Or you've just signed a severance package for one of your former employees. How do you capture that kind of an event as well, or a potential contingent liability like that? And so those are things we want to ask questions about as well. And how does management communicate? What do you do about the financial statements? Are they generated every month? Who reviews them? Who's looking at them? Are variances analyzed? Because we want to be able to see do you have a system in place to try and capture or identify errors or potentially even fraud? And the 5th component of a system of internal control is probably the one we're most familiar with, and that's actually the control activities. That's about the controls over funds, essentially, money coming in, who's got custody of the money coming in, who has access, money going out, who can authorize payments, who authorizes payroll every month or twice a month. What are the controls over funds that are not in your bank account but are in an investment account? And maybe that's an area as well that we see sometimes those controls are a little bit more lax, or they don't mirror the strong controls around a cash account. So what are the controls over funds? What are the controls over other assets, like inventory, like a collection, like capital assets? What are the controls over journal entries? Who has the ability to record journal entries? Who has the authority to actually approve them? Who reviews them on a regular basis? And then the IT controls identified as well. And again, so that's the area where that traditional system narrative on your revenue, receivables, receipts, or purchase payables, payments. We're more familiar with those things. But again, this standard change or revision is a really great opportunity to review them and beef them up where there might have been changes or they were a little bit light in the past. So we've just walked through all of the different areas where we need to obtain an understanding. And again, we've always obtained an understanding. The standards just want us to go a little bit more in depth and get a more robust understanding in some areas in particular, so that we're ready for the next stage as auditors. And so based on this body of understanding, we're going to sit back then and identify and assess where there are risks of a material misstatement. And we do this for every balance in your financial statements. And we do this for every assertion related to the balance in your financial statements. So you should see our risk documentation is quite lengthy right now. But this is the level of detail the standard wants us to go through. And this is the equation that we actually take into account. And it's not necessarily a mathematical equation, and it's not precise. It is judgment at the end of the day. We take all that information and we assess risk in two ways: the inherent risk of the balance that we're looking at, the assertion that we're considering, and the control risk as well. Now, control risk, if I'll start there for a moment, that's the risk that you have controls in place, but they're going to fail. They're not working well. And so when we know that, if we find that out through the audit process, if we test controls and that's the conclusion, they're actually not working as you intend, then the control risk we assess as medium or high. Inherent risk has a lot more to do with the balance we're looking at itself. So its particular characteristics. Is it complex? Is it subjective? Is it subject to uncertainty? Is it subject to any kind of management bias we might have identified? You want it to be higher or lower, and there's a little bit of wiggle room, gray area there for you to work with potentially. Is it subject to fraud or error? And so these are considerations we have to take into account when we're looking at inherent risk. And so quick example, if you have investments in shares that are publicly traded, the value of those shares and that investment at your end is pretty easy to verify. We can find out how many shares you own based on your investment statement given to us by a third party. We can go to the market and see what the value of those shares were at your end, quick calculation. We can compare to the value you have on the books. It's not really subject to complexity, subjectivity, uncertainty, management bias. You can't really change that number. It is what it is. Versus you are invested in a private company and you hold some private shares. Information's not readily available. You might get drips of information from the management of that private company. You might have a bias to not want to write it down if there are indications that it might not be worth the amount you have on the books. Suddenly it's subject to complexity, subjectivity, uncertainty, potentially management bias. And so that would drive up our inherent risk on something like that. So just wanted to give you a sense without turning you into auditors, but this is the kind of analysis and thinking. After we gain that body of knowledge, we have to sit back and make these assessments. Now, again, we are going to be looking at your systems and reviewing our knowledge this year in particular. We ask you to do the same. So as you look at your systems of internal control, you beef up your documentation, you might have really evolved as an organization or as an entity over time. You might have put more controls in place in specific areas, but all around. And so we might actually be able to incorporate that into our audit plan. For most of you, I'll venture to guess that we use what we call a substantive approach. What does that mean? As auditors, we sit back and we think, well, it's a small maybe company or it's a small entity, small accounting environment. There's probably a lack of segregation of duties. Well, we're not going to test controls. There won't be enough of them there to actually rely on them and incorporate them into our audit. So let's just go straight to the documentation. We're going to test, and go back to the invoices and payroll contracts, et cetera, and just get our audit evidence that way. But again, if you review your documentation, you sort of sit back and you think, you know what, in the area, for example, of payroll, we've put lots more checks and balances in place. Maybe our auditors can rely on controls and actually do less substantive testing. That might be a really good, efficient use of our time. And so we ask you to consider that. If we're your auditor, we're willing to have that conversation. If we're not your auditor, seek out your auditor. Ask them, is there an area where you think we could rely on controls and thereby reduce the substantive testing and make the audit more efficient? So if controls can be relied on, this is the equation we'll use. We'll actually assess the control risk based on our findings after we test the control system. And again, it's not an all or nothing. We don't need to test the entire control system. Maybe it's just one stream that we look at that particular year. If we cannot rely on your control system, and again, some of you will just have that small accounting environment, and that's okay. That's your context. We're just simply not going to rely on controls. We are going to simply look at the inherent risk of the item we're looking at. The risk of material misstatement is then equal just to our inherent risk. So just wanted to give you a little bit of a flavor as to what we do with that information. But again, the takeaway for you is if you think you've beefed up controls, that actually engage in conversation with your auditor and see if you can do it in a more efficient way at the end of the day to get that audit evidence they're looking for. Now, switching gears, and I think, Leanne, you once said to me this was your favorite slide.
Yes, I probably did. And it's another one of the changes that came with CAS 315. Professional skepticism. We have it there on the slide. It doesn't mean, as your auditor, we don't trust you. We do trust what you're saying. However, we do have to maintain an independent, objective mind as your auditor. And really what that means is we need to evaluate every piece of audit evidence we're given, every piece of audit discussion information provided, and analyze it with an objective mind, free of bias, independent thinking. That is what really an audit is, to be able to provide that audit opinion you're seeking of us. If we're not able to do that, then we cannot give you that audit opinion. And so really keep it in mind as we're going through that field work this year, and that we may be corroborating some explanations. It's not that we don't trust you. Professional skepticism has always been there, but there is a more focused on this new standard. And really what that means for the upcoming 2023 fieldworks is that we may ask new questions, as we've said time and time again during the past 30 minutes. We may question assumptions provided. Even if they're the same assumptions as last year, we may have some new questions on it, on how you came up with that assumption, especially if there's some grayness or subjectivity related to that assumption. We may not accept that all explanations are accurate or true, and we may want to talk to others within your entity. We may do this because we need to use professional skepticism, but we actually just may do this because it makes sense. You know, if you have an inventory manager, it makes sense that we talk to that inventory manager about inventory and why it changed. However, it also provides us the opportunity to corroborate information provided using professional skepticism. We will want to make sure the evidence provided is authentic, unaltered, and not edited in any way. That's not new. As auditors, we've done that even when you provided us that paper bank statement, and we're doing it now when you're providing us that virtual bank statement remotely. Assessing contradictory evidence. Sometimes we'll talk to multiple people, or we'll get multiple sources of documents, and they may say different things, or they may appear to say different things. But we're going to follow up on that contradictory evidence. We would have done that in the past. That is not new. However, you may see it as coming across as new this year because we are going to be focused on maintaining professional skepticism. And finally, we're going to evaluate every piece of audit evidence we get. We're going to ask ourselves, is this sufficient to be able to provide you that audit opinion that you want from us, your auditors? So we will be asking ourselves in our head as we're going through it, okay, is this audit evidence sufficient? If yes, then there's no further follow-up. If there's something that seems not quite correct, or something that's a little bit confusing, we'll ask follow-up questions, and then we'll document it as our audit evidence. Now, we're going to change gears a little bit, and we're going to give some tips to how to proactively manage this change. So I'm going to pause here for 1 second, because I will say when we first started this process, we've done a few audits now under CAS 315, or almost completed audits. You know, when we're adopting and implementing the standard, looking at it, we really thought it was going to be a significant change. It is a significant change, not going to lie to you. There are going to be a few more questionnaires, a lot more questions. However, it is turning out to be not quite as significant on your part, on the client's part, as we first thought. And I think Nanette can agree with me there. So the one first tip we have is the more you do, the smoother it will be. So, first of all, we're holding this webinar to try to give you an idea of what to expect. Because when we all manage our expectations, that's step one done. We will be asking you to fill more out. We'll be asking you more questions. And so if you can do that, we ask you to do that in advance. So first of all, if you haven't heard from us yet, you will in the next couple of weeks as we go through our audit schedule. And one of our plans is to talk about CAS 315 and how it relates to your organization, your business specifically. What is the impact of CAS 15 on your audit? What can you expect out of your audit fieldwork and your auditors this year? If you have a hour time and we haven't contacted you, please feel free to reach out to us. We're happy to chat. We're happy to pick up the phone, and we'll provide those templates that we have developed in advance. And you can go through it. Don't feel like you need to fill out all the templates yourself. Use the other people in your organization that may have that information readily available. So if you have a person responsible for IT, don't necessarily think, oh, you have to fill out that IT questionnaire. Please feel free to hand it off. It does not have to be you, even though we are talking to you and we are emailing it to you. A lot of times in our prior year's audit file, we are already going to have a lot of system narratives documented. We have Word documents, and sometimes, in some cases, we have flow charts. We're very happy to share these if you don't have it on hand yourself. And you could simply start by going through these documents, turning on changes in Word, and just adding gaps where there may not be gaps anymore, updating information that's been changed, software changes, who's doing what now. And as you go, it's probably the most efficient way to do it. But if you don't have maybe what you've given us last year or the previous year, we're very happy to share that with you. Reach out. We are happy to share with, as we begin the audit. But if you want to get a head start, please feel free to drop us an email and we'll send that back to you right away. You also may have in your files your own narratives that you haven't provided us in the past. Don't do something customized for the audit. We will take those narratives and use it for the audit process. If there's something unaddressed, we'll ask you about it. So don't feel like you necessarily need to do something just specific for your auditor. If you have a documentation, provide it to us and we'll let you know if it works. So these are some of the systems to document information technology or information technology systems. The cycles, as Nanette mentioned earlier, these are probably the areas we've already have a robust knowledge and robust documentation, but the revenues, receivables, receipts cycle, the payroll cycle, the purchases payable and disbursement cycle. Investments, maybe not. This is one area we find that we don't have as much documentation, who's authorized, who's responsible. And so this is probably an area that we'll fill in some gaps this year. Inventory cycle, we probably have fairly good documentation. We may have some gaps, but we think we probably have robust documentation. Capital assets is another area where we may not have who is responsible for it, what's the purchase order process, if there's a tiered process. So we may have some additional questions in this area. And of course, the financing cycle and process will probably update our narratives in the current year.
So I will say this, that you said it wasn't that big of a change, and I agree. But if you don't have anything documented and you simply would rely on the bare minimum questions we have to ask to get that understanding in the past, you're probably going to have a little bit more work to do. Again, take this moment to actually document your systems in a way that makes sense to you, and so that you have a record of them for succession planning as well. And so leverage this change. Audits are compliance exercises, let's face it, and they're not necessarily a whole lot of fun, though I think we're on a mission to make them fun and painless anyways. But take a moment then, if we have to comply with new revisions, take a moment to leverage the change to make your organization stronger, elevate your system of internal control, take it up a notch where you need to. Do you have to take it up a notch everywhere? No, prioritize. But these are some of the areas where we think will apply to most organizations. IT controls I mean, IT's evolved so much. I'll venture to say that a lot of us haven't caught up with our, formalization of who does what, who's allowed to do what around IT. And so figure that out, formalize it, document it. That might be an area of focus for you this year. Identify gaps in your controls. So again, you might have lived with gaps in your controls in the past. You've done a cost benefit analysis and it wasn't worth fixing. Many times people would give us a little bit of pushback when we'd say, you need 2 people to sign all checks. And you'd say, well, do you know how hard it is for me to get that second signature? Nowadays, we're not really using checks at all. And the time and effort to get 2 people to authorize a disbursement is really, really a simple thing. And so things have evolved, technology's evolved. And so where you still see gaps and you know that there's a technology solution around them, or find out if there is, identify those gaps and do a good cost benefit analysis around those gaps and see if it's time to actually evolve, elevate, make your system stronger. Revisit how duties are segregated. Sometimes you've just lived with who's responsible for what, or we were smaller than we are today. We have more people. We can distribute the tasks to have that stronger system of internal control. So again, think about that. Revisit, rethink your system of internal control. Since you have to document or update the documentation anyway, really give it that second sober thought. Processes should be automated as much as possible. Automation is absolutely the name of the game. Where you have a manual process, think about whether there's a technology solution. And we might not have the answers, but feel free to call us and say, do you know somebody who knows how to automate this? And we'll do our best to connect you as well. But take a moment to think, you know what, we waste so much time on this process being manual. Let's see if we can automate it. And prioritize. So maybe you don't look at your entire system of internal control and try to strengthen it all at once, but pick a stream, pick an area where you're like, you know what, it's time. It's time for us to elevate how we do this particular process. Maybe it's payroll, maybe it's the payment cycle, whatever it is, take a moment to think about how you can strengthen that transaction stream. Now, especially for not-for-profit organizations, but all boards. Board members have an obligation to understand and oversee the internal control process. Share the documentation with them. So again, I sit on boards and it's sometimes an awkward thing to say, hey, can I get a copy of the system of internal control? Because I need to be able to articulate, understand it, know where there are gaps and risks. So now that you are, because of this change, you're going to have to look at your documentation again, update it, share it with those charged with governance, help them do their job as well. And then together assess where there are gaps and see if they are gaps you can tolerate within your risk appetite as an entity. And speaking of risk, again, one of the areas, as I mentioned before, where I think applies to many, many entities is just not having that formal risk assessment process. Maybe us talking about it more, asking questions about it more in this process to satisfy the revisions of the standard. Maybe that's what gets you guys going. And, now is the time. Let's get the people around the table. Let's brainstorm risk. Let's get a risk heat map. You can Google. There's so many different kinds of risk heat maps out there. Find something that works for you. And maybe this is the moment to elevate and do something about that. And so at the end of the day, when there's a change in standards, we do have to comply, but let's take a moment to take it up a notch and just become that stronger organization.
You actually touched on my favorite part of the presentation there, Nina, because yes, an audit is compliant based and we have to go through this steps. And as our clients, you have to go through it with us and do certain things, but take that and actually make your organization stronger with it, better with it. That leads to something like a great product versus just doing it because you have to. And as our last slide there, it remains our goal to provide you a painless, cost-effective audit. We know we have CAS 315 to apply. There will be a lot of other new questions, additional questions. It may be a little bit time consuming, but our goal is really to provide a painless, cost-effective audit. And then we're hoping that through this change that we all have to go through, that you'll get a better audit process, but that you will also come out as a stronger entity, CAS 315, that you could leverage this change.
That's it. That's what we wanted to cover with you today. Do you have any questions for us? And again, Christina, I invite you back on to put your camera back on and moderate, articulate
Yeah,
any
no.
questions.
Yeah, I think it's a great, like a bunch of golden nuggets. I know we've been preparing for months and months for my condo people on the webinar. So just want to let you know all of the discussions that we're going to have with you. We are going to be able to, if your management company manages several condominium corporations, we're going to be able to leverage these discussions about controls and risks for all of your condominium corporations that you manage. So I just wanted to put that out there. We don't have to have separate discussion, separate documentation for every single condominium. But no, I think this was absolutely great.
Thank you. And, you know, so you can use the Q&A function. Well, we'll hang back for a few minutes. You can use the Q&A function. You could raise your hand and we can give you back permission to use your microphone, which we've sort of taken from everybody. If you'd
We'll
like.
also be trying to distribute the slides in the next couple of days, so you'll have them as a set of handouts as well.
Either we were super clear or we lost everybody in all the audit theory.
Exactly. They ran away and don't want to deal with us anymore.
There is a
Connie,
question.
to answer your question about the presentation, yes, we will share the recording as long as you're okay with listening to us again.
Awesome. And, you know, I'll put it out there as well. If you'd like us to come and talk to your boards and walk through this change, I'm happy to spend 5-10 minutes with them as well. It's just a really good opportunity to get everybody kind of thinking about controls again.
Also, we will be having conversations with each of you as your audit comes up about CAS 315 and the changes. We know this was a general discussion to give you a bit of an idea, but we will be having customized discussions as each of your audits come up.
There is a question. Do we have a link to a risk heat map for a smaller NPO?
Not off the top. I don't know, Leanne, if you've got one. Not off the top. I'd be Googling just like you, Elizabeth. And when you do, there's so many variations, and it really depends on the size, the complexity, how many different risks, what kind of process you're going to adopt to try to assess the likelihood and magnitude of risk. But you know what? I'll go on the hunt and I'll reach out to you, Elizabeth, if I find something.
I may have a couple of resources to share with you, Nanette, just because I've sat on a couple of smaller boards that I might be able to provide you something that we've used in the past, and then you could evaluate it and see if it'll help Elizabeth.
Thank you. Oh, he'll just call me. That's great, Elizabeth. Looking forward to that. Okay. Well, we don't need to keep you. So thank you.
We know everyone's time is valuable.
Thank you once again for joining us, everyone. We really appreciate your time. We will try and get a survey out as well. So if you think that these webinars could be something useful, you'd want to hear from your auditors every now and then on something, we'd love to hear from you on that and just get your feedback and any topics you'd like us to cover in the future.
Yes, any suggestions, we welcome it. If you have the suggestion is probably means it's of interest to others as well.
All right. Thank you so much, everyone.
Thank you, everyone. Enjoy your afternoon.
Wonderful day.
Bye.